Yeah, good morning, everyone. So, yesterday again we saw US market moving up, mainly driven by the positivity in their results which are coming. Out of the S&P 500 US, around 9% of the company have declared their results, and out of that, 70% of the company has shown a result above estimates. So that is keeping the sentiment high in US. Even if we see post-market, futures are up as Netflix has reported results post-market hours, and they have declared result above estimates, wherein the addition of subscriber was more than double the estimate of the company itself in the previous quarter. So that's why the Netflix in aftermarket is up by around 14%, which will be reflected in the today's market hours timing. So US market is showing positive trend, but similar positivity is not reflected in the Asian market. Asian market are more of a mix. We are seeing marginal up or some negativeness also in the Asian market. On the commodity side, oil is marginally down from yesterday, around $0.5, and also iron ore is up by around 1%, and steel is flat. So no much movement in commodity as well. So more of a sideway market is likely to be seen. Now I'll request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. Yesterday, we have seen a very strong gap of opening, and the strength has remained intact till the end of the day, which gives a strong sign as of now on the market. But Nifty has just touched the fit of 50 DMA, which comes to at around 17,500 levels. On intraday basis, we have seen that the Nifty has surpasses that level, but somehow managed to maintain the closing below that level, which gives some sort of a cautious sign. So as of now, 17,500 will act as a strong resistance zone on the closing basis. If Nifty surpasses that level, then this rally is likely to be extended towards 17,600 to 17,700 levels on the higher side. Whereas on the downside, the first immediate support is placed at 17,340 levels. Any move below that level, we are likely to witness some sort of a profit booking, which might drag a Nifty towards 17,200 to 100 levels. So as of now, the overall view will be a sideways itself. This pullback rally is likely to be extended only if it manages to uh, gives the breakout of 17,500 levels. Coming towards the Bank Nifty is the one who had shown the first sign of a pullback rally. As of now, we are looking for this pullback rally likely to be extended on the higher side. So the for today intraday purpose, the first resistance zone is placed at 40,650 levels. Any more above that level, 41,000 likely to be tested very soon. Whereas on the downside, the 40,000 will act as a strong support level on the psychological front levels. If it's break that level, then 39,700, 39,500 levels can be seen. Coming towards the Nifty Finance for today intraday purpose, 18,260, 18,470 are the resistance level. The flip side, 17,910, 17,770 are the crucial support. We need to keep eye on it. So the overall view will remain a sideways itself. One should be a stock specific only. Whatever the positions you have, just hold on with the strict stop losses. Coming to the stock specific, Tatacom really looks very good on the technical front. If you look towards the weekly chart, the stock has given the breakout of the cluster supports levels yesterday with the very strong volumes. So one can take a long position in Tatacom at CMP as well. We are looking for a target of 1300 and 1320 on the higher sides, and stop loss can be kept at 1200 levels. Second stock is Mahindra CI. This particular counter is also really doing very well, and it's on the verge of quoting a new 52-week high. So I believe it has a potential to reach up to 325 to 330 levels on the higher side. One can take a long position at CMP. Stop loss can be kept at 304 for a target of 325. That's it from my end. I request Nirav to take a call forward.
Thank you, Swati. See, on the derivative front, Looking at the overall open interest, the open interest has come down quite sharply yesterday. Now, with the open interest coming down, another very important thing has happened. The 17,500, 600, 700 calls have seen open interest built up. Even though we closed above 17,500 for the futures, you are seeing open interest being built in, which does suggest that there can be some selling coming in for today, at least for probably for today or tomorrow. It can be for a couple of sessions only. But yes, unless the PCR above at 17,500 goes above 1, you will see some resistance coming in from the 17,500 levels. The VIX has come down from 20 odd levels to 17, which is a good sign. But we still need VIX below 15 to see a further rally. So all in all, the data is suggesting a slight negative bias, and that is why, if you've bought something in the last couple of days, it can be a good strategy to book profits for in the opening for today, and then wait it out till 17,500 is broken above on a closing basis. Once that happens and data turns positive, that is when we would like to buy again. So that is the view for Nifty. And from the stock specific front, there will be some stocks which will do very well. So from the last couple of sessions, Infosys has been seeing short covering action, which is a very important sign, because Infosys is generally the leader for the IT pack, and this stock seeing short covering means the other stocks will again look to come up as well. So IT sector as a whole should come up. I believe Infosys and TCS and even HCL Tech should lead this rally on the upside. BHEL has seen good amount of open interest built up. Longs have been seen, and also a breakout has been seen in the session yesterday. So most likely this stock will move up towards the 70 to 75 level. So look out for the same. So that's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. Today, Piramal Pharma Limited, which was recently demerged from Piramal Enterprises, will be listing. Shareholders of Piramal Enterprises have been allotted 4 shares of Piramal Pharma for every 1 share held in Piramal Enterprise. So, Piramal Pharma has a differentiated business model, as in it is present in 3 major segments: CDMO, which is contract development and manufacturing, which is a high margin business, and then complex hospital generics, as well as India consumer products business. And the listing is expected to happen at between 200 to 250 rupees. If you recollect, when before the demerger, when the whole company was trading, the pharma division used to command a value of between 800 to 1000 rupees. So accordingly, we feel it can list between 200 to 250 rupees per share. PSP projects result was below expectations. Revenue declined by 9% year on year at 375 crores against expectation of 475 crores. And accordingly, profit also came much lower than expectation at 23 crore versus expectation of 40 crores. And year on year, it was 37 crores. Although on the P&L front, things look disappointing, but the order inflow continues to remain robust, and order book has increased from 4,600 crore in June quarter to 5,100 crores in September quarter. So near term, it might be under pressure, but we think from a long-term perspective, stock will recover. Praj Industries result is okay. Order intake seems to have stabilized at the 1,000 crore level per quarter since last 4 quarters now. Order book is at 3,350 crores. Giving good growth visibility for next 3-4 quarters. Revenue for the quarter came at 877 crores, plus 60 growth of 65% year on year and 20% quarter on quarter. Gross margins remain subdued at 35% mark. So until now, it had been continuously declining. So now it seems that the gross margin has stabilized, and going forward, it can gradually improve. Accordingly, EBITDA margins also were constant quarter on quarter at 7.5%. So going forward, we think with the margin improvement and top line growth has already been strong. We think from long-term perspective, stock can do well. ICICI Lombard General Insurance result is marginally above expectation. Gross direct premium income grew by 19%, and within that, if we look at performance of health insurance was better than all other segments, and that grew by 40%. Uh, Profit before tax came at 610 crore versus expectation of 550 crores. So around 11-12% beat on PBT. And year on year, it was 465 crores. So good growth. Although combined ratio came at 105% versus 104% in June quarter. The first half market share for the company improved by 50 basis points year on year and was at 8.4%. However, if we look at quarter on quarter basis, then it has declined from 9.9%. So we remain positive from long term perspective on ICICI Lombard. Thank you.
Good morning. TRAI has posted addition of subscriber data for the month of August, wherein Jio has added 3.8 million subscribers, which is the highest addition. Bharti Airtel added 0.32 million mobile users, and Vodafone India lost 1.95 million users in August. This is positive for Jio. L&T Technologies posted its result yesterday, and the company has posted above expectation numbers for the quarter, with CC QOQ revenue growth coming in at 4.5%. EBIT margins expanded by 110 bips Q on Q and came in at 19.4%. For FY23, the company has upgraded the lower end of the USD revenue growth guidance to 15.5% to 16.5% versus previous guidance of 14.5% to 16.5% in CC terms. EBIT margins management expects to be in the 18% range in the medium term. Outlook is marginally positive. Stock is trading at 34.2 times FY23 EPS. Newgen Software posted its result in market hours, and the company has posted improved set of numbers Q on Q, with revenue growth coming in at 20.3% and EBITDA margins improved to 16.6% versus QQ of 10.3%. Stock is trading at 17.1 times CTM EPS. Sonata Software has posted in line with expectation set of numbers for the quarter. In international IT services, dollar revenue came in at 58 million versus expectation of a similar number, and EBITDA margins expanded by 36.1% to versus QQ of 36.7%. On consolidated front, also the company has posted in line set of numbers. Stock is trading at 14 times FY24 EPS. Thank you.
Good morning. Maharashtra Seamless had its con call yesterday, wherein the management has revised their dispatch target for FY23. For its seamless business, management has revised its target from 350,000 ton to 365,000 ton in MSL, and from 120,000 ton to 105,000 ton in United Seamless. Dispatch target has been reduced in United Seamless, as the company will be making high value addition pipe, which will take more time to manufacture. However, it will generate much higher margins. Company has filed an application with NCLT for amalgamation of United Seamless with Maharashtra Seamless, and is expected to complete by the end of this fiscal year. The company's consolidated order book stands at rupees 1780 crores, which and expects this order book position to continue for the rest of FY23 and going forward as well. Export orders are still coming in, and exposure to export segment is around 35%. Management has announced a capex of rupees 852 crores over the next 3 years. Considering the company is focusing to increase its participation in high value added segments. The company also announced bonus shares in the ratio of 1:1. We are positive on this company. Heidelberg Cement had its con call yesterday, wherein the management indicated that the sales volume for the quarter declined 10% sequentially due to weather-related issues faced in UP and MP. Company uh, company has taken a price hike of rupees 5 to 6 per cement bag in late September and start of October. However, the prices were down on a Q1Q basis. Post Diwali, the management will further consider taking a price hike depending on the demand. Uh, uh, Coming to the capex and expansion of the company, management has indicated that they're working on debottlenecking of their plants, which will happen next year, starting with line 3 and then line 2 with a capex of rupees 50 crores for FY23 and 55 crores for FY24. Company is also expanding in Gujarat with 3.5 million ton in phase 1 and another 3 million ton in phase 2. Management expects to get environment clearance by June 23. Capex for phase 1 expansion is 200 million euros. Net debt stood at rupees 10.9 crores as the company paid dividend during the quarter. We are neutral on this company. Tinplate Company of India reported declining set of numbers both on revenue and EBITDA front. EBITDA came in at a negative of 40 crores versus positive of 120 crores sequentially. JSW Ispat Special Products reported a declining set of numbers. Revenue came in at 758 crores versus 1665 crores sequentially. EBITDA was negative at 92 crores versus a positive of 17 crores sequentially. Share is trading at EV by EBITDA of 28 times on TTM basis. GMDC reported okay set of results considering it was a seasonally weak quarter. Revenue came in at 539 crores versus 452 crores year on year. EBITDA came in at 171 crores versus 27 crores year on year. The share is trading at EV by EBITDA of 3.7 times TTM basis. Thank you.
Good morning. Schaeffler India announced its result. The result was in line with expectation. Revenue came in at 1,756 crores as against an expectation of 1,662 crores, which was flat sequentially but grew by 18% on a YOY basis. EBITDA margin came in at 18.2% versus an expectation of 18.4%, which was 18.4% sequentially and 17.8% on a YOY basis. Despite inflationary pressures and a challenging market environment, the company outperformed. The stock is trading at a PE of 28.3 times FY23 EPS. Thank you.
Good morning. This is Priyanka. Yesterday, Gujarat Fluorochemicals posted result above expectations. Revenue grew by 51.6% YOY basis at rupees 1,461 crore. Based on that, PAT grew by 74% YOY. EBITDA margin also came at 36.7%, which is above expectations of 34.2%. The stock is trading at PE of 32.5 times of FY24 EPS, and we are long-term positive on the stock.
Yeah, another company, Polycab, came up with the number. Here the numbers were more of okay, set marginally improved, but the crucial part is that their engineering, their consumer electronic division has shown a bit negative trend, though wire division continue to show good growth. So that makes a result a bit softer. Overall, seems long-term outlook for Polycab looks positive, but near term it may remain sideways as most of the consumer electronic consumer electrical goods are showing a bit softness in the current quarter results, and that is getting reflected in other that will get reflected into other company as well. Apart from this, results for Friday. So Ambuja Cement is likely to report number here again. We are likely to see declining results, mainly because of increase in cost, and even realization also remains soft quarter on quarter. And volume was up by around, is expected to be up by around 7%. But what we are seeing that now the companies have taken some price increases, and further likely to take increase depending on the demand environment. And also cost is coming down as coal cost has also started coming off, and even petcoke has declined. So quite possible that quarter on quarter Q3 will start showing positive trend as such stock which are get impacted because of the lower margins, and poor results may not decline much from here. Then Atul Limited is likely to report number. Here again, the result is likely to show good improvement of around 18% revenue and 19% quarter on quarter, year on year. Even quarter on quarter, the margin which has declined to 15.8% is likely to come back to around 17.6% in this quarter. So result is likely to be improving. Then Hindustan Unilever is likely to report number. The results are likely to be more of a okay set of numbers, wherein revenue is likely to increase by around 12% and EBITDA is likely to increase by 7%. EBITDA margin, which is the key thing to be watched, is likely to remain stable quarter on quarter, but likely to show improvement in the coming quarter as the raw material prices has come off, and that will start getting reflected into Q3. So Q3 onwards, margins are likely to come back to their normal level, which has declined in last few quarters. So the normal levels are at around 25%, which has come off to around 23.3% in the last quarter. So outlook will be comparatively positive for Hindustan Unilever. Then Indraprastha Gas is likely to report declining results. They are facing burnt on account of high prices of natural gas, and that's why the margins are expected to decline. Then JSW Steel is also likely to report declining results, mainly on account of decline in the realizations. The realizations in this quarter are likely to decline from 77,000 to 61,000, and that will get reflected into EBITDA per ton, and EBITDA per ton in last quarter was at around 10,700, which is likely to come off to 6,400. So results are likely to show very poor numbers in this quarter for most of the steel companies. Then Torrent Pharma is likely to report okay set of number, and United Spirit is likely to show bit declining numbers with margins remaining lower. Last quarter we had seen that the margin came off to 12.6%. Their normal margins are at around 17%. Which is likely to improve, but it still will be much lower than the normal level which was there in the last year of around 17.4%. So against that, this time also they will be reporting 14.6% revenue, and revenue growth is also likely to be around 6%. So more of a declining number from United Spirit. Then HDFC Life is likely to report number, and numbers are likely to be okay, with APE growth of around 6% and VNB margin growth of around 8% year on year. Poonawalla FinCorp is likely to report improved set of number, with PBT is likely to grow by around 26% and PAT is likely to grow by around 22%. SBI Life is also likely to show improved set of number, with VNB is likely to improve by around 30% year on year. So that's all from fundamental side, and I'll request commodity team to take up from here.
Thank you, sir. Good morning, everyone. We are witnessing in precious metal prices are trading in the range bound. Gold is resisting 50,550 on higher end. So buying around 60,350 is recommended with a stop loss below 50,200. At present, 50,250 to 550 is a range, and one can trade in a range. Uh, Silver, one can initiate a buy at 56,400 with a stop loss below 56,100. Prices are resisting 50,800, 850 zone. So likely to uh, break the resistance and test 57,300 on higher end. So buying in precious metal is recommended on dips. However, profit taking is advisable on higher end. Crude oil prices have breached the support of 7,000, and one can sell around 6950 to 7,000 zone. So selling on rise in crude is recommended. Prices can test 6,800 to 6,750 on lower end. Natural gas, one can expect a pullback. So buying at 470 is recommended, and one can maintain a stop loss of 460. A pullback till 485, 490 is expected, whereby profit booking is advisable. Copper 2 have reached the support area of 647. So a pullback till 644 is expected, whereby again selling pressure could be witnessed. So one can maintain a stop loss above 647, and prices can test 638, 635 on lower end. However, zinc is looking attractive. One can buy around 265 and maintain a stop loss of 262. Prices can test 269, 270 on higher end. That's it from me. I'll ask Riya to continue.
Thank you, sir. So, on the currency front, we are seeing quite a momentum into the pound and euro. This is because there is a float of positive sentiment, or at least some uh, confidence is coming into the economy, taking into consideration that a lot of the policies were scrapped. Thus, if you look at the open on the GBP INR, it has opened on a positive note at around 93.35. In today's session, it can again head towards the level at 93.65, 93.75, and 94.10. That is the upside target for the GBP INR. You can maintain a stop loss at 93. Volatile will still be at a highest peak in the GBP INR. So follow the SL very closely. In Euro INR, also so the positivity is getting reflected. There is no major data there into the eurozone as of now, so you can see some upside tick at around 81 to 81.28, 81.35. So a small buy can be initiated by keeping the SL at 81.04. For the JPY INR, the downside pressure will continue. JPY INR right now is trading at 55.35. If it breaches the day low, which is at 55.30, it can head towards 55.10 and 55 levels. So a short can be initiated by keeping the SL at 51.45. For the USD INR, it is closely following a sideways consolidation momentum, and it is likely to follow the same in today's session as well. Uh, and the RBI is quite closely watching the volatility into the USD INR, and this is the reason why we are seeing such a range bound momentum. 82.50, 82 the range would be between 82.55, 82.20. So that's the range for today into the USD INR. It is most likely to follow the sideways consolidation momentum in today's session. Thank you.